Yo. Boom. We
I'm
back.
going to add in a drum set so I can play with it. All right. Welcome back, everybody, to the I Love Annuities Podcast. I am Zachary Van Ness, and the CEO of Annuity Association, Jeremiah Conjure, joins me here today.
Happy to be
And
here.
we here are the Annuity Dudes. We had an awesome episode last week, so if you haven't checked it out, jump in, check that out. We've got an even better topic today. And today we will be covering the ultimate checklist for choosing your annuity. This is really going to be a step-by-step guide. So feel free to break out your pen and paper. This will help you confidently pick the right annuity for you and your goals, what your lifestyle looks like, and what your legacy looks like here in today.
Thanks, Zach. Yeah, before we get into the episode here, what do you think, Zach, about the annuity dudes? I mean, there was there's already the annuity guys; those were taken. The annuity man was already taken. So all that was left was the annuity dudes. It just had a good ring to it. So what do you think?
You're not suggesting we change it, are you?
Mm-mm.
Okay, I
Too
was going to
late
say,
for that.
I say dude way too often to go changing it. So
I like it. I think, annuity and dudes, like they have the same, vowels in the middle.
yeah,
I think it
I
has a
didn't dig that deep into it, but I still like it.
it'll be a household name. That's really the mission, right?
That's right. That's right.
So
And then beyond that, I mean, you'll be getting it off of some of these other guys who are either hunting or fishing, because it looks like you're about to go fishing or hunting today.
well, it's Friday and I have a bad haircut, so decided to wear a hat today. So no worries. But anyways, yeah. So this is the episode. We're really excited about it. It's all about the ultimate checklist to choosing your annuity. So we're going to be covering in detail all of the things that someone that's thinking about purchasing annuity, where you should start, the things you should consider, and you know ultimately creating a step-by-step guide to help you pick the right annuity. And so this is something that you don't want to wing. I say this often in our meetings. There's no do-overs in this type of stuff. Annuities are long-term retirement vehicles, and oftentimes they can have terms of 10 years or longer. And especially when you're thinking about lifetime income and that type of thing, those are even longer term commitments. We're talking a lifetime. So you want to make sure that you're picking the right one. There's many different income annuities out there, and each different type of income annuity, there's hundreds of different product offerings. So you definitely want to make sure that you're doing your due diligence to research what's available to you, who you're working with to find the information or source the information, and is the information valid and truly accurate to help you make a good decision. So we understand that this is your hard-earned retirement money, and everybody deserves to get this right. And the last thing you want is a sales pitch and to be sold something. So whether you're approaching retirement or you're already there, our advice here today on this episode is to grab a pen, open your notes, and whatever you need to take detailed notes about this, because it's going to be very valuable to you, very insightful to make good decisions. We're going to walk through the 5 core steps to make sure that the annuity choice that you go with is rock solid.
And if you've met with us already, you know our main objective is to provide you with the education of the annuity marketplace and how to make the right decisions. Us putting out this podcast and education that we do, we're not being paid unless you're being paid something I don't know about to do this. We're
Sponsored
not.
by Dunkin' Donuts today.
There we go. Okay. All right. So really, again, we just emphasize so much that we want the education out there. Would love to work with you, and if you find this valuable, reach out. But we just want to make sure that everybody's well educated in this, and really getting to that point of the first step. And we'll just hit this thing off right now. First step in this process of the 5 core steps in the main focus of this episode of the ultimate checklist for choosing your annuity is ultimately choosing the right advisor. And not all advisors are going to be created equal. That's where we change things a little bit here at Annuity Association.
Yeah, it's always going to start with the advisor first, and maybe even the firm that they're affiliated with. And the reason for that is unfortunately in this industry, the annuity industry is still very antiquated. I've said this on previous episodes. And the only way for a consumer to get information or to gather information is to talk to multiple advisors. And unfortunately, there's a lot of websites out there that have annuity information, but there's no centralized database or hub that has everything. Each website in some fashion is going to have some sort of bias or have some sort of like gatekeeping where they keep certain information from you in order for you to then feel inclined to give them your contact information so that then you can unlock, if you will, the information that you're hoping to gather. And then you get called and bombarded by, sales reps and agents. So unfortunately, that's something that it still exists today. And we're really, really passionate and adamant about trying to change that. And we are changing it. And our website is a truly independent website, and we're continuing to build upon it. And we have some things in the works that, later this year is going to, I think, really change the industry for the better and allow consumers to have more information at their fingertips without having to talk to multiple advisors and unfortunately go through a very biased sales process. So when you are looking at today and trying to gather the right information to ultimately choose the right annuity for your circumstance, it starts with the advisor. You definitely want to be speaking to somebody who's truly independent. An independent advisor is going to have no allegiance to any company or any specific product. And they're going to have full access, or they should have full access to the independent annuity marketplace. I did mention this on a previous episode that there was a survey done across all of the annuity advisors, or a majority of annuity advisors. And the question was, how many annuity products do you primarily sell? And the answer was 3. So you have a ton of advisors out there who are required to do what's right by you and in your best interest. But there's still a lot of gray area there where, as long as they have a handful of products, they can say or sign off that they are acting in your best interest by recommending the best of the few that they offer. So to hear that the majority of advisors out there are only representing 3 annuity products, and typically how they do that is they'll have one that's for immediate income, one that might be for deferred income, and then one that'll be for like a growth play, like a safe growth or protected growth play, fixed indexed annuity generally, or a MIGA. So to hear that, you definitely have to make sure that you're asking the right questions. And one of those questions that you can ask is straight up, how many annuity products do you have access to? And can you prove that to me?
Yeah, it's a great point. And interesting case study where I had somebody call in on our line this week actually and told me, "Hey Zach, I was suggested this one product." I said, "Okay, well, what are your thoughts about that?" He said, "Well, I'm calling you today." I said, "Okay, so what does that mean for you?" And he said, "Well, I've got some reservation." He said, "I didn't fully understand why I would be suggested only one product. And after seeing some of Jeremiah's videos, lent some understanding that there's a lot more out there than what I was shown." So this isn't an uncommon situation. We run into it quite frequently, and we see it day in and day out.
Yeah, it's funny you say that because I just got a call yesterday. Actually, I was on the line with you when this call came and beeped in, and I clicked over, and it was a gentleman, and his question was all around, what do I think about the Midland National annuity? And I said, well, I I don't know. What is your objective, and what do you have in terms of the purpose for the money? What are your goals? And he said, well, what I'm trying to do is, they're looking for guaranteed income. And he said he got positioned this annuity from Midland National, which is an A+ rated company. And he said, it sounds really good. And, the advisor told me that this is the best one and that I should move all of my money into this product because, I don't want to be in the markets anymore. And I said, well, hold on a minute. I said, did he, give you a few different annuities to compare and evaluate side by side and prove that that one is the best one for your circumstance? And he said, no, that's the only one he showed me. And then I said, okay, all right. And then you mentioned also that he said that you should consider moving all of your money into this annuity. And he said, yes. And I said, well, I've already heard two red flags here. And he said, well, what do you mean? I said, well, first off, if he's only showing you one annuity and not giving you the ability to compare and contrast, then there's some sort of bias here. Like he is not doing the right thing and allowing you to evaluate all of the options. And second is nobody should ever consider putting all of their money into an annuity. I don't care what the situation is. That's not prudent. That's not sound. A good retirement plan has to address liquidity for emergencies and unexpected spending shocks. And annuity companies won't even allow somebody to put all of their money into an annuity. Even if you wanted to, there's a limit of how much of your investable assets can be positioned into an annuity. And so I told him, that's something that you don't want to do. And long story short, he wanted to evaluate the entire marketplace. And so we got a meeting with him next week to take a look at, his situation and help him compare all of the annuities to make a good decision. And that's ultimately the most important thing, is to be able to provide the transparency and the education and really give people the ability to make their own decision. I think that's essential to this. This is their retirement, and people want to have a level of confidence that they're making the right decision. Because like I said before, there's no do-overs here. These type of products, they have surrender penalties. If you did make a mistake and you want to cash out and move your money, there's penalties involved with that type of thing. So we want to make sure that we do the right thing and make the right choice. And that takes somebody that can help you evaluate the options, look at them in an unbiased manner, and ultimately, narrate or help you navigate what you're looking at and how to compare and contrast the available options.
Yeah, it's a great point. And I think, from our end of it, one of the things that we provide a lot of value in, that I've had the comment before about, it feels like working with folks who position annuities, they're keeping it close to the chest and they're not showing us everything. Well,
Yeah.
here's the opportunity. We're being straightforward with you. We've shared our screen more than once on these podcasts, and we do them in our meetings every day to show what we have to offer. And we're not hiding anything. So transparency being the key. And not only that, when we're looking for the advisor, we want that transparency, but we also want some type of proof to the pudding, or some type of proof to their ability. And I think we do a good job of showing that in our reviews that we have as a company too, not just yourself or myself, but as a whole from our company.
Yeah, absolutely. So, it's all about making sure you're working with the right person. They need to be independent. They need to have no allegiance to any company or product. They need to have the education of the marketplace, what's available. And most importantly, is they should have the tools that are needed and necessary to help someone navigate these important decisions. And the tools are going to be, softwares that can rank and sort all of the available annuities on the independent marketplace and give somebody the ability to compare and contrast all of the features and benefits of each product side by side. And that's the place that I would suggest someone start, is when they're working with an advisor, ask to see their tools. How are you going to make a recommendation for me? What tools do you use? And I know, Zach, a few of the tools that are available. And these are the tools that you should be asking if they have access to.
Yeah. So from our end of it, we use several different tools to get to that final decision. It's not just one. As you've mentioned before, we work with different IMOs, and an IMO is what bridges that relationship with all of the other carriers of which we do business with. So that allows us to branch out to different carriers that not every annuity consultant may have access to. Um, so from our end of it, we're working with Annuity Rate Watch, CanX, and ultimately the software that anybody who's seen the podcast before, Annuities Genius, has seen that as well.
Yeah, and it ultimately came down to when we started our firm, right? And I've said this on other episodes. Our mission was to right the wrongs of our industry and create a better annuity buying experience. And we fully believe that that starts with transparency. Like you said a moment ago, annuities, when somebody's going to talk to an advisor, sometimes they keep it close to the chest, right? And they don't unpack everything. And it's a weird situation when you're in that environment. You're talking about your retirement, for crying out loud, and potentially a significant portion of those assets going into an annuity. And what do people have to hide about it? And so when we got started, it was all about transparency. And we believe that trust matters and transparency fosters that trust. And that's when we started to look at how can we make this buying experience better and really shift, like have a dynamic shift where anyone that comes to talk to us, they don't feel like they're being sold something. They feel like they're being empowered to make their own decision because they have the ability to compare and contrast all of the available options right in front of them, real time.
Mm-hmm.
And we do it on the fly. That's the beautiful thing about our experience, is that we do it on the fly. Whereas, 99% of the other annuity advisors out there, the way that their meeting process is going to work is you're going to meet with them first. They're going to learn about you and what your goals are and things, and maybe what your assets might be. And then they're going to say, I'm going to need to, research some options. And then the next meeting, I'll show you a couple. And then they're going to sell by illustration, which is something that majority of them do, is they'll pick the three annuities they have. They'll pick one or two of them, and then they're going to just show you this like big lofty illustration, and that's what they use as a sales tactic. Whereas with us, real time, on the fly, sometimes even in the first meeting, when we get to learn about your situation and what you're looking for, what your goals and objectives are, and what assets you have to fund those goals. If we cover enough information at the end of that first meeting, you're going to be able to see the whole marketplace and have access to all of those products that are going to help you meet those objectives. And you're going to come away from that first meeting with a feeling of empowerment and saying, wow, this is amazing. Like, I know exactly what's available. I know what companies are offering the right products for my situation. And I even know how to evaluate them. And ultimately, the goal in working with us and us working with you is to lift or increase your annuity IQ, to have you more reach a higher level of education to assess the marketplace so that you can confidently make a good decision on your financial future. And obviously, we're going to make our recommendations. That's where we come in. But you're going to know exactly how we determined those recommendations and came to them ultimately. And you're going to have a high degree of confidence in those being the right recommendations for you, not them just being a recommendation, but you're going to understand how we got there and why they are the recommendation.
Yep. I don't think I can add anything more to that. I think we covered that pretty well.
Yeah, I think it's important. So it's all about starting with the advisor. The other thing that we were going to cover real quick in that topic, and then we'll move on, was, ask them the tools that they use to come up with their recommendations. They should be willing to show you those. Ask them what products they have access to. And then last but not least, there's another way to check how many carriers or annuity providers they are working with. And I know in Florida, which is our headquarters here at Annuity Association, if you go to the Florida financial services website and you look up my name, you'll see my license. And then when you click on that, it'll show you all the carriers that I'm appointed with. And so you can do that in your state, whatever state you might be in. You can look up your state's financial services website or insurance license website and figure out who you're working with, and then look up what carriers they're appointed with. And if it only shows like one or two, that's a red flag. If it shows dozens, that's a good sign. But
great point.
That's I guess a parting topic there. And then the last thing is make sure that they're part of a larger team or a larger organization. Only 8% of annuity advisors or financial advisors, for that matter, make it past the 5-year mark in this business. So you want to make sure that you're working with somebody that's a part of a larger team, that in the event the advisor that sells the annuity to you, that they don't make it in this industry, or they have a change of heart and have a career change, or they pass away or whatever, they lose their license, who knows? But you need to make sure that they're part of a larger team that can then take on your relationship and continue to support you, not only to the annuity application, but throughout the policy and the life of the policy.
Yeah, excellent. Excellent. So that would cover everything for the right advisor. I briefly mentioned the only last key thing that I will add there is, taking a look at the reviews. If they do have reviews as a company, as an individual, do a little bit more research behind the scenes other than just surface level.
Yeah, reviews are important. And some of the sources that someone could go to would be the Better Business Bureau. If they're a legitimate firm, they should have a Better Business Bureau page. I would be a little bit leery of some of the pay-to-play review companies. Like, I don't know, there's a few of them out there, but if you pay a certain amount of money, they're going to give you reviews. Better Business Bureau is legit. There's representatives that oversee all of the reviews, and they ensure that they're legitimate. So that would be the source that I would consider. And then, look at the reviews and the testimonials. I think that those are very, very important, and they hold their weight in gold. That if people are willing to share their experiences, especially positive experiences, a lot of people are willing to share their negative experiences. But if there's a ton of really good reviews, that's a really good thing, and that's a good sign that you're working with the right firm.
Yeah, without a doubt. All right. Number 1 done, right? That would be choosing the right advisor. Step 2, defining the objective. Are we looking at annuities for the purpose of growth or income? And this, this sounds simple, but I will say oftentimes somebody will come into our meeting for the first time and hearing about annuities and maybe not having a clear defined path of what their goal is for their monies.
Yeah, it's something that I feel it seems so elementary, right? Like, is the goal income or growth? And those are two different product types in the annuity world. Sometimes you can have a product that does a little bit of both, or does both, one maybe better than the other. But what happens oftentimes too, that we hear all the time, and this can be chalked up to maybe just a lack of education on the advisor side and the consumer side. It could be that you're working with a greenhorn, somebody that just got into the business and they're excited to start positioning products, and they hear something that sounds good or looks good on paper. But we hear the horror stories all the time. People come to us and they say, "Hey, I have this annuity. I'm not really sure exactly what it does. I don't know if it's even right for me, but I got it because I bought it through a friend, a relative, or I bought it through a friend of a friend who's an advisor. And they told me I'd get this big bonus," right? It's always around the bonus. That's usually how people get sucked in. And a situation happened not long ago, about a year ago, and I have a YouTube episode about this situation. But a gentleman, came to me and he's like, I got this annuity through such and such carrier, very popular annuity provider. And he said, but, I don't really know. I don't understand it. And I don't really know what I have. So would you mind spending some time with me to go over it? And I said, well, sure. Well, what happened to the guy that sold it to you? And he said, well, he's not in the business anymore. I said, okay, that happens. And so I said, yeah, I'd be willing to help you out and see what I can help you figure out and whatnot of what you have. Long story short, he had an income annuity that was a performance driven income annuity that was a long term income product. And this guy has a pension. He worked for the state of Florida. He doesn't need income. He said, I don't need income. I never needed income. Um, the guy that set me up with this just told me it had a bonus, and that's why I got it. So long story short, we were able to get him out of that product and help him recover some of the surrender fees that were involved in that exchange. But it happens all the time. So you need to understand which product you're working with and what they're pitching to you. And is it an income play or a growth play? Is it more growth or income oriented?
Yeah, I actually had a situation this week that I think I had mentioned to you. A client called in and actually saw our podcast on YouTube and said, "Hey, I wanted to call because of last week's episode specifically.
Yeah.
Got into an income annuity, and I don't need it. Yeah, it just wasn't necessary. Really, the only reason I wanted this annuity was for the benefit for our grandkids." So he's like, now I'm forced into a situation at which I've got to take this income, and my account value has been depleted to zero because of fees. And it's
Oh,
just,
that's tough.
again, going back to understanding how you're utilizing the tool, just like anything that may be on the tool belt.
Yeah, and that's a tough situation when somebody's kind of stuck, right? There's no options to get out at that point. But that's really one of the things we're trying to change. That's the point of this podcast. That's the point of our firm. We're really trying to do the right thing, and that's to bring more transparency to this industry and to help people make better annuity buying decisions. So, when it comes to whether or not it's income or growth, it's very simple, right? If you're looking to replace a paycheck, then you should be thinking of income oriented annuities. If you're trying to grow a nest egg safely over time, then you're thinking about safe growth. So that can be either a fixed rate annuity or MIGA, or maybe even a fixed indexed annuity with a contractual guarantee of principal protection with uh, potential upside performance to the market linked indexes that are available. So once you've understood what your goals and objectives are, you also need to make sure the advisor understands your goals and that you're being clear about what you really want your money to do for you now and in the future. So once that's locked in, then you're ready to move on to that inspection phase, which we are very passionate about. There's a way to evaluate these annuities, and it's a deeper dive into what's available and what to consider when it comes to the features and benefits and how to truly evaluate the multitude of options that you're going to be presented. And we've developed a proprietary process to really understand how to evaluate these thoroughly and more so simply.
Yeah. Yeah. And I think, just adding one more piece to that about defining your objectives, it may seem odd to ask the question, but it's, in my opinion, worth it. Ask the advisor just to repeat back to you how they understand your objective to look and what your goals are. Um, Make sure they understand what you've relayed to them. Because to your point, Jeremiah, we want to make sure that our clients are getting across the point of what their intentions are. But we've got to make sure that we understand exactly, not only in verbatim, but explain it in a different way and make sure we are understanding it from all angles.
100%. And the advisor that you're working with should be providing you with a meeting summary or a recap of your conversation or discussion. And they should be covering what they understood of your needs and defined objectives for this money and this potential annuity purchase. And if they're not reiterating what you said, or maybe they don't even provide a summary at all, you got to really question, are you working with the right person?
Yeah. Yeah. And to the point that you had mentioned about an advisor coming back a week later, a couple of days later with solutions. Well, if they don't have notes to fall back on or key points of reference, it'd be tough to come up with that solution in a week and remember exactly what every answer is. So, all right. So recap real quick. So number one being choosing the right advisor. Number two, defining your objective of what that annuity's purpose is for, income or growth. And number three, if income is the goal, this is number three for us. We're going to conduct a multi-point inspection of annuity incomes, and we'll cover those 5 points with you here.
Yeah. So when we first started our firm and, started to evaluate the entire independent annuity marketplace, even as an advisor that had these tools available to run a scenario, see which annuity options come up and what companies are offering them, it was still a bit complex to feel like we were making sound recommendations because there's a lot of moving parts in a way. There's a lot of features and benefits that these annuity products can have. And in order to know that we were doing the right thing by the client, which is our ethical and moral standard, is to do the right thing and act in your best interest, we had to figure out a way to conduct a multi-point inspection. And when it comes to income annuities, if the primary objective is income, and that's all that somebody should just be basing their decision on, that's an easy solution. It's whatever company comes in at the highest amount of guaranteed income for your situation, age and whether it's single or joint, deferral period, etc. So that's an easy solution to figure that out. But when I looked at the market and when I learned about these products and found that, there's other things that should be considered in order to make a better annuity buying decision, we developed this process to take people through that so that they could confidently make a sound decision. And we found that it's more than just who's going to offer the highest guaranteed lifetime income.
That's right. That's right. So a couple of key factors that we consider there, again, using that 5-point or that multi-point inspection, that's going to be, and by the way, this is in no specific order. This is based on our clients' needs. They determine what this order would be. That's highest income guarantee. The carrier rating, so that company that we're electing, how important is it that we choose a carrier with a strong rating? Index return potential. So we're looking at sustaining that account balance for a longer period of time. Is that index return potential important or imperative to sustain it for a longer time for a death benefit or the ability to withdraw? Number 4, the income rider fee. We factor in that income rider, and is that important again in sustaining that account balance for a longer period of time? That would be the main driver there. And last, the enhanced benefit for long-term care. Not every lifetime income product has an enhancement of income for long-term care, and there are different versions of it on the market too. So just understanding if that's a feature, and we speak to this as a feature, not a guarantee, if that feature is important to somebody.
Yeah, so these are the 5 points, that multi-point inspection. These are going to be really more relative to a fixed indexed annuity with a guaranteed lifetime income rider. Those are going to be the more popular income products for most situations. Obviously, a single premium immediate annuity isn't going to have all of these valuation points, but for this, it's more relative to the fixed indexed annuity with an income rider. But these are the 5 points, and these 5 points are going to, in terms of the weight of importance that somebody puts, it's going to be tailored to your preference and to how you feel about these different options or different things to consider. Somebody might put more emphasis on carrier rating than highest guaranteed income. It's very often that we hear, I don't care what we look at as long as it's an A+ or better company. They don't even want to think about anything less than that. So they put a very, high weight of importance on the carrier rating, which is great. And I think that should be something that should be at the top of this list. But sometimes people are more of I like the ability to sustain my account value or have the potential to sustain my account value longer, so that if I die earlier than anticipated, there's more money passing on to my beneficiaries. So in our meeting process, we'll go through this with you and get an understanding of what you place as importance and how you rank these 5 elements. And then we'll help you sift and sort and compare the available options based on how you rank those 5 elements. But yeah, maybe we should do that, Zach. What do you think? Maybe show like a quick demo of how we would take someone through that.
Yeah, I think that would be great. And while you're pulling that up, it is interesting because I have a half joke, half truth in that, we've got to make sure when we consider the carrier rating, we got to make sure that company is going to be around to give us a paycheck. So it's easy to say that you want the highest income, but if that company's not there 30 years from now, or there's a concern that that company may not be there 30 years from now, then it's a consideration in how we make this choice.
Yeah, without a doubt, man. Yeah, I think when you're looking at a lifetime income play, longevity of the carrier is essential. And you definitely want to know how long they've been around, what their financials are, what their rating is, and make a good decision there. It's very, very rare that, you would ever want to consider going with a lesser rated company unless there's just enough value to make sense of that lesser rated company. Maybe they're offering significantly more income or whatever, but it's very rare that makes sense. So right now I've taken up a quick demo here of the software that we would use to help make a good recommendation and ultimately help you make a good decision. This is our income riders calculator here, and we can base the options on your resident state. Each annuity and annuity company has to be approved in that particular state in order to offer products there. So it's governed by state. We put your age, the amount of premium that you're thinking of putting in, and if there's any particular riders that you're looking for, we could sort and sift through that. If you're looking for ratings of a particular rating, we can sift and sort based on your preference of A or A minus or A plus or better. And once we have that established, and if you're also looking for joint life income, we could put that in here. And then this software is going to rank them chronologically according to the highest contractually guaranteed lifetime income based on your age, whether it's single or joint. And then if you're deferring it for a particular period of time before you start that income stream. And it's going to rank them. And these rankings are going to change as we move this deferral bar to align with your goals. And like I said before, if you're just coming in for the highest guaranteed lifetime income stream, this software is going to tell us exactly who it is. But what we found is that that's not all that you should be considering in most cases to make a good decision. And what we often find is that sometimes maybe if you have a small compromise on, say, the lifetime income amount, you can potentially get better value in other areas of those 5 points of inspection. So maybe that's in the enhanced income benefit for long-term care. Maybe it's a lesser rider fee that's being charged to you annually. Maybe you're going to get a better carrier rating by just taking $100 less a year in income. You can get a better deal with a better carrier. So it's all going to come down to what you find to be the most important, but we can help you with a high degree of confidence make a better decision, and that's without a doubt.
Yeah, and there are certain features, something like the enhanced benefit for long-term care, which may be valuable in some situations and may not be. So while some companies may offer it, depending upon the time at which the income is starting, it may or may not be really feasible to consider in that thought process.
Yeah, so just a quick overview. If we were in a meeting, let's say with a prospective client, the first thing we would do is plug in everything here. It's going to rank them according to this green number, which is the highest contractually guaranteed annual income. We can also look at it monthly. And then we're going to take you through the 5 points. 5 points being income, carrier rating, which is located here left of the carrier name, index return potential on the account value, which is your liquidity, it's your death benefit in the future. That account value can be sustained longer if you have higher index return potential. We're going to look at the rider fee, which is charged annually, and then whether or not it has, the specific annuity product has an enhanced income benefit for those long-term care events in the future. And based on what comes up, we're going to go through those 5 elements and then try to determine, is this still the best option? Or maybe we go with a little bit less on the income, but we get other features that are more important to us. So that would be the quick rundown of what meeting with us would look like. And it's, really going to give you a lot of value in understanding how to assess the marketplace to ultimately make a confident and educated decision.
Yeah, that's great. Thank you for sharing that.
Yeah, of course.
Anything else that you wanted to add on the income, the multi-point inspection for income?
No, I think we covered it all there, man.
Yeah. So I would call that step 3A, and maybe we move to step 3B, which would be really that multi-point inspection for growth.
Yeah.
So we start looking at how we can use a fixed index annuity for income. We've got our inspection points there for that designated purpose. We look at the next, which would be for the main purpose of growth. And when somebody may say, well, these are a lot of steps to go through. The only thing I would say is when we're looking through these processes and we're working with an advisor, if we were to compare that to buying a home, real estate agent takes us out to go check out a home. We're not just going to take their word and say, yeah, this is the home that I should buy. You're going to walk through it, take a look at it yourself, determine if it's of value to you. Do these check off my key points of interest? Not only that, I'm going to go and I'm going to have an inspection done on the home. My real estate agent's not going to get up on a ladder and crawl through the attic. I want a professional to do that. I want somebody who knows what they're looking for to do that. So the reason we put these pieces in place is so that we can really define an individual's need for their specific criteria. So I realize that we go through a lot here, but there's a reason for it.
Yeah, and it's ultimately to help people make better decisions, right?
That's it. So going to growth, we'll run through our checklist here of how we'll use this inspection. And that would be, again, in no specific order. It'll be dependent upon that individual and their needs. Index return potential. And that would be a look at both back tested over the last 10-year average and real return since inception. And I think we've brought that up before in the podcast, in that we're not just looking at the last 10-year average. We want to consider whether it be year to date, the most recent year, the most recent 3 years. Secondly would be the carrier rating. Again, we bring that up. Third, the index options and how we diversify those index options, how we do that crediting strategy. Number 4 would be the free withdrawal provision and surrender charges. So is it important that you have the accessibility to withdrawals, and at what point? Number 5 being something that we've talked about, and we're actually diving into more recently about this and coming up with this plan, was the renewal rate integrity and the lock-in options for those specific indexes within the annuity.
Yeah, those are so critical to making a sound decision when it comes to the growth side of the annuity marketplace, is really evaluating those 5 points and honing in on a couple of those in particular that are unique in comparison to the income play or income side. Number 5, you touched on the renewal rate integrity and lock-in options. The lock-ins referencing, does the index crediting strategy have the ability to lock the performance at any point in that crediting term? This is something that is somewhat new in the marketplace or in the industry. Within the last, I'd say, 5 years, there's been more carrier adoption of offering these features. The lock-in is really essential to helping someone have some sort of control during the 1 year or 2 year or even multi-year crediting periods, so that if there is waves of volatility or you have some sort of market sentiment that the market might be declining, you have the ability to lock in the gains that you have up to that point, and that's what will be credited to your contract upon that next contract anniversary. It's a very valuable feature. I love it. I know with this recent wave of volatility, I emailed my clients that have products with the lock-in feature and said, hey, I know that there's some volatility right now, and we have a fair gain in the contract that you might want to secure. So you have the ability to lock it. Would you like to do that? And if they say yes, it's a simple form. We go in and knock that out. So that's really critical to making a good decision is do these annuities you're looking at have those features? And then when it comes to that renewal rate stuff, that's regarding the actual crediting rates, so participation rates, caps and or spreads. You want to make sure that the carrier you're working with has sound renewal rate integrity. In other words, they're not changing the rates constantly year to year, which they do have the right to do. You need to make sure the company you're working with has sound renewal rate integrity. And one way that you can find out if they do or not, because not all companies publish their renewal rate history, which is, in my opinion, garbage. But there are companies that do, and you need to make sure you're working with a company that does publish it and has some factual data to support that they have sound renewal rate integrity. So, I can't stress these things enough. The other thing is the back tested and real time returns. These matter. A lot of advisors out there just sell by illustration, which is going to show you this lofty back tested return, which these indexes have been created in recent times. So when these institutions create these indexes, they have hindsight to their advantage, and they can make an index look really, really good because they know exactly how it would have performed in the back test. And so what we look at is, yes, we look at back tests, but that's not the end all be all. We actually place heavier weight of importance on real-time returns. In other words, when that index actually went live on the market, when it was incepted, what has the performance been? And then we can tie in the performance to the other asset classes or benchmarks in the stock market and bond market and see, did they perform the way they should have? So there are good indexes out there. There's bad ones. We want to make sure that they're performing the way they should.
Yeah. And you hit on a great point here while we're covering these steps of, the multi-point inspections. One thing that you really pointed out that stuck out was that lock-in option. And what you had mentioned is that we reach out to our clients when we reach a certain point, when we recognize a positive for our clients or even a negative. But it's worth knowing in our process that we take, we don't see this as a one-time transaction. These are relationships that we hold for as long as we're working with you, and for as long as that agreement is in place, and as long as you want to work with us. So we don't recognize this as a one-time solution. We'll contact you, let you know, hey, here's what's going on, whether it's positive or negative. We continue that relationship.
Yeah, absolutely. And that's essential to all of this is the relationship. It matters.
Yeah. So anything else you wanted to add on?
No, I think we're good. Let's roll on to step 4 there.
Yeah. So step 4 being just understanding the application and transfer process. So when somebody is ready to move forward with an annuity, this kind of speaks back to our process that we take in communication. Now we've picked an annuity, we've elected one. Next comes the electronic transfer process.
Yeah, and this should be a really smooth process. It should be very simple, cut and dry. You're dotting your I's, you're crossing your T's, and ultimately, what it's going to come down to is that your advisor is keeping you in the loop on everything, and they're helping you take care of this application. But even more so after the fact, they should be providing you with weekly updates at a minimum of the status of your application and how things are moving through the queue there at whatever insurance provider or annuity provider you're working with.
Yeah, and I've got a standard practice in place that everybody gets an email every Friday just to check in, even if nothing new is going on. even if we're in the same position in the process and transferring funds over. Even if I talk to them the day prior, an email still goes out just so that I can continue my checklist and make sure that I'm following up with everybody.
Yeah, and transparency again is going to be key here. You're not just handing over your money and hoping it all works out, right? You should be able to verify everything along the way. And one of the ways that we are able to provide our clients, a very transparent and simple process when it comes to putting the annuity in place is once the annuity application's been submitted, as soon as a policy number is assigned to that case, we're going to send that in an update to the client so that you have a verifiable number that is unique to you. And you can call the carrier and speak with them and verify that that policy number exists to put you at ease that everything is going the right direction. In addition, a lot of times people are weary about the funds transfer process, right? Like they sometimes may assume that if they work with someone like us, that's a virtual firm, and we work with clients in all 50 states, that they don't know us, right? They're not going to a local branch that in their town that they can see somebody face to face, and they're kind of hesitant about moving funds. Just to put it out there, funds never go to our custodianship. When you buy an annuity, the process of transferring funds is 99% of the time a direct transfer. So in other words, it's a custodian to custodian transfer. So if you have your funds at Fidelity and Nationwide or whatever insurance company that offers the annuity, that's the one you're moving forward with. That's a direct transfer between the custodians. And in that application, there's going to be transfer paperwork that's done and signed off by you. And then Nationwide or whatever insurance company it is will take that signed off paperwork, contact Fidelity or whoever the custodian is that has possession of the funds initially, and say, hey, we have a mutual client. They're wanting to move X amount of dollars from this account at your establishment over to us. And it's a direct transfer. So it's very safe. It's very sound, and very low risk. It's no risk. Money doesn't go to us. So that's all I'm trying to say there.
Yeah, we've got the ability to document for it and do follow-up calls, include you on those calls. So if you do want to speak with your transferring custodian to who it's going to, or to the carrier it's going to, you can call them together if you'd like to verify anything else. But Jeremiah, I apologize to leave you. That client that I had mentioned earlier that wanted to meet, who had only been suggested one annuity product, we've got a meeting with them here at the hour. So I'm going
No
to
worries.
leave you with the final step, and I will hop off. So until next time, I'll see you then.
Thanks, Zach.
Thanks.
So we have step 5 to wrap this up. And it's very simple. It's, the person that you're working with, the advisor on this annuity purchase, they should have a process and a commitment to conduct annual performance reviews with you. We want to ensure that, you're getting the most value out of your annuity, especially if it's a fixed indexed annuity that has the option to reallocate the index crediting strategies every year or every 2 years. It's essential that you're working with someone that's going to continue reviewing the performance of your annuity so that you can really get the most value and get the most opportunity for your money. So here at Annuity Association, we call that process the annuity assurance process. And that's our commitment to every client that we're going to work with you every year, set up an annual review, and go over the performance of your annuity, determine if your objectives or goals have changed or not. And then if you need to do any maintenance on your account, whether that be beneficiary changes or address changes, or even, maybe you're thinking about turning on your income stream, your lifetime income stream, we can help you put all of that together and put it in place for you, and get the paperwork that's needed to make those adjustments. But that's essential to making sure that, you're not having to call the carrier yourself and handle all of these things. When you're buying an annuity from somebody, they're getting paid to do this job, not just to help you purchase this annuity, but they're also being paid in advance to service your relationship and your annuity account. So it's essential that whoever you're working with has a defined process to conduct these annual reviews and help you understand how the performance was for that year, if it's a indexed annuity or whatnot, and make sure that you understand exactly what you have. And those annual reviews, I can't tell you how often, we meet with somebody and it's only been a year, but they don't remember all of the things that they got with this annuity. So it's a good refresher too, to keep you up to speed on exactly what you have and where your hard-earned money is going, and where, how it's serving you. So it's definitely essential. So when it comes to these reviews, again, you want to make sure that they're using the right tools so that they have a way to help you make sound recommendations on those reallocation opportunities. There's going to be tools out there like the Index Standard, which is a firm that specializes in the analysis of these available indexes on these fixed indexed annuities. And they're going to be able to give us very transparent data to allow us to make good decisions when it comes to the reallocation opportunities. So you need to make sure that the advisor or firm you're working with has access to these tools to be able to make those recommendations for those reallocations. We often see that most of the time people don't have the right tools there, and oftentimes they might just leave the allocations as is or make an uninformed decision there to reallocate. And oftentimes that's a mistake and not the best route to go there. But that's going to really sum it up here for the ultimate checklist to buying an annuity and finding the right annuity that's going to meet your defined objectives and goals near and long term. It's very simple, and we believe in these steps. And if you're looking at buying an annuity, these are the things that you need to be considering when evaluating who you're working with and what annuity options you're comparing and contrasting, so that you can ultimately make a confident and more informed decision. If you're on that path now and you're in the market and considering buying an annuity, and you want to work with a firm that has all of these resources and tools and these defined processes, we would be honored to have the opportunity to see how we can serve you. And you can do that and get started by going to annuityassociation.com and requesting your free annuity report. You also have the ability to schedule a annuity discovery meeting with one of our advisors. Or down below this video where you're watching this, there will be a link to request your report or schedule a time to speak with one of our expert advisors and help you evaluate the marketplace. But just to recap on these, choose the right independent advisor, define your objective, whether it be income or growth, conduct a detailed multi-point inspection based on that goal, understand the application and transfer process, and then last but not least, that they're willing to commit to scheduling annual reviews to help optimize the performance of your annuity. So with that being said, this is Jeremiah Conger here at annuityassociation.com. We are the Annuity Dudes, and you are watching the I Love Annuities podcast. Until next time, signing off. Thanks so much.